Okay, so this is an overview of Chapter 3, Russell Long. So if you're in the tax software and you have the information for Russell Long, so problem number 2A on Chapter 3. So Russell's birthday is 1974, and he's married to Linda, whose birthday is 1979. Russell Long has his income. He runs a landscaping business. And so they're giving you a Schedule C on this landscaping business. Scroll back up here. So Russell, here is his Schedule C. I have put it, which I will share in Moodle, into Excel for you. So this matches what the book says. The book has total revenues, and then it has costs of service, gross profit, a bunch of operating expenses, and per the books, it's a net income or loss of 287, but not everything goes on taxes. Net income per books. So the net income per books is $287.34. But they gave us some information that is helpful. So they said that the campaign, the $600 in donations right here, which I'm going to highlight, donations, right? They said that this is a campaign donation. So if this was a charitable donation, it would go on Schedule A, but campaign donations are not deductible. Add back campaign donation, not deductible. So we're going to add back the $600. They also said that no business gifts exceeds $22. So therefore, we know we can deduct all of the business gifts. So that's fine. And they said that meals and entertainment includes $1,000 of business meals and $800 for tickets. So we are going to add back tickets. Tickets, not deductible. So entertainment is not deductible. So that was $800. And then we're going to add back 50% of meals. So meals is $1,000, but only 50% of that is deductible. And we took the whole 1,800 right here, right? So we're going to add back that. But additionally, they have mileage. So I calculated over here. They drove business miles 970. The IRS rate, which we'll put in, which we'll calculate in the software when we're done, is 70 cents a mile. So the car and truck expense less mileage. So we're going to subtract the car and truck expense. And then we will get to net income per tax before home office. Because home office will go in its own spot. So let's see what we can come up with here. So I'm taking the net income per the books. I'm adding back anything we can't deduct for taxes, subtracting anything we can, and we should get $1,508 in profit before home office. And then I'll show you how to take home office deduction. All right, so let's go to the tax return. I'm going to move this over here, and I am going to go to income, and we are going to go to his Schedule C. You should have a landscaping business. I believe he has an address out of their home, so you don't need to put a different address. He has an EIN. He's on the cash method of accounting. He doesn't have any inventory. And this is for the taxpayer, Russell Long. And so we don't need any inventory. He would get a 1099 NEC if he was doing landscaping for businesses. They did not give us any of that. So we are going to go here, scroll down. All right. So we're going to go to the income statement. So click the income statement at the top. So his total income. So I make this Excel file whenever I'm doing taxes, and that way I can highlight when I have gone through and put that item into the correct spot on the Schedule C. So I'll be doing that on my second screen here. So gross receipts, 137,253. So I did do the taxes last year, so that's why there's a prior year number. All right, we don't have any inventory. So now we're going to go down to the expenses. So they do have advertising expense. So advertising expense, and you're going to round to the nearest whole dollar. 1407. I'm just going to go in line. Contract labor. He does have contract labor. 7805. And we might be off by rounding, and that's okay. They do have dues and subscriptions, $110. They have insurance. He has insurance. Insurance is 3788. Oops, typo. 3788. So insurance. They do have vehicle equipment rental. So he's renting equipment. So 12.5 is his equipment rental. And he has repairs and maintenance on the equipment. 8279. And if you can see here, I'm highlighting as I go along on the Schedule C. So I'll post that Excel file in Moodle for you. All right. He does have payroll taxes. So payroll taxes, 6804. He does have a telephone expense. Telephone, 2528. Okay. Travel. They didn't say any of the travel was not deductible, so we will just take all of that travel. Some travel is considered personal. So you have to put the full meals. So he had $1,000 in meals, and it'll deduct 500. So we will put the full meals. All right. And then uniforms and specialty clothing. So this is that specialty shoes, and that's where I would put this, 724. Total wages, 85298. Okay. I then have some other expenses, so I'm going to click here. And I have business gifts, 792. I have training, 1690. Oh, no, 1975. So I have training, I have business gifts, and then I have other. I probably would not have that person put other, but that's fine. 1690 is other. Okay. So I'm going to click OK. So I've entered everything but the business mileage. So I believe we can income statement. There should be a spot where we click and put mileage. 1 second and I will find it. Okay, so I searched 2106 and I found the vehicle business mileage. So you should select Schedule C and landscaping. And we are going to go down and hit find this vehicle is used by a 5% owner of the Schedule C. They have another vehicle. All right, so they have a truck. So the total mileage driven was 3,000. The total business miles was 970. And the commuting miles was 2,300. I'm going to do that. And then I'm going to check the return and see if this came out on the forms Schedule C. So we should see this on the Schedule C. right here, 679 miles. So good news. I'm also going to go over here. Ignore this, but I'm going to check my net income per taxes before home office. Now there's a prior year home office, so I'm going to get rid of that because I did a prior year return. But as you can see, our $1,508 is right here. So I'm going to go back to the input in the return. And now I'm going to go to 8829, business use of the home. So we should find form 8829. You should select that it's for the Schedule C and the landscaping business. All right, so they already have in here the 192 square feet, that it is 1,600. I'm going to delete the carryover because you didn't have any carryover. And we're going to put in indirect expenses. So they paid rent of $13,200 and utilities. This means it's for the whole house. Indirect is, it wasn't directly for the business, but they're using 192 square feet. So now I'm going to go check return. And I'm going to go to forms. And I'm going to go to the US. And I'm going to go to the Schedule C. And we should have a zero profit because home office is calculating as $1,508. So home office, because there's probably a carryover. So let's go to the 8829. So we can see this 192 square feet, 1,600. You can't create a loss with home office. So that's why there could be carryover. So they have 12%. So their total income is right here, net profit before home office. So their home office deduction allowable is $1,800, but they can only deduct $15,800 to get to a zero profit, and they will have a $292 carryover till next year. And then I'm going to have this net profit per tax equals. So we really have a zero profit per tax. Okay. So now that we've done the Schedule C, there are some other things we want to talk about. Okay. So it says here, the Longs inherited a large farmland from Linda's father and sold it immediately for market value. Linda's father had a basis of $30,000 and owned the land for many years. Linda invested the proceeds in a potato high dividend yield, and here's her 1099 div. Okay. So the 24 land sale, which wouldn't have had a capital gain, happened in 24, not 25. Now she's got 1099 divs. So we're going to go to income and we're going to go to 1099 div. So this is where you put the name. This is the quick entry form. So I'm going to hit details, and this should bring you to potatoes high dividend yields form. So potato high dividend high yields, we put in the payer's information. This is in Linda's name. She got $30,500 and it's all qualified. $30,500. Oops, made a typo there. So you should have $30,500 in box 1A and 1B for dividends. All right. Linda lost her job. She has unemployment compensation. So we're going to go put this here. We have the Idaho Department of Labor. We put their address. We put 2 because it's Linda's unemployment, right? What was the total amount of unemployment compensation received? $1,900. And what was the federal income tax withheld? Box 4, $190. So this is her unemployment. It's on a 1099-G. Russell divorced in April of 21 and pays his spouse, Louise Long, $200 a month. Now remember, divorces after 2018 December are not taxable to the receiver and they are not tax deductible to the payer. So we don't do anything with this. The Longs elected to apply their prior year income tax overpayment to this year's tax return in lieu of a refund. Okay, so we will need to find estimated tax. 2025 estimated tax payments. So we go here and we say the overpayment applied from 2024 is $325. So they were supposed to get a refund last year and they applied it to 2025 instead. Okay. So now I'm going to go to check return. US. Okay. So once we go to check return, right, I should be able to see here the 1040. We have Russell Long and Linda. They are married filing joint. So you should have on here 30,500 in dividends, right? You should have $1,900 in unemployment compensation. Then the 31,000, so income is 32,400. 31,500 is married filing joint standard deduction. So they have $900 in taxable income. They have $190 withheld from their 1099 unemployment compensation and $325 applied from last year. So they owe $515. I know some of you are having a hard time printing, so you just want to go ahead. If you go to File, Return, Print to PDF, and create PDF. This is all you should need to do, and you should download this, and it will give me all the forms I need, right? They owe $515. The Schedule C will be here. The additional schedule for income will be here. The in 1099, the Schedule B for interest and dividends will be here. And here is the CrossFit scenario. Also, the 8829 will be here. And QBI would be here. It's calculating, but there's zero QBI because there's zero profit. And this shows the follow-up. I saw a bunch of people in Mississippi, but they do, I believe, live in Idaho, unless I'm looking at this incorrectly. Yeah, Idaho. All right, I'm going to post this, and I'm going to post the video as a review to the chapter 3. Let me know if you have any questions.